Assalamu alaikum, dear students. In today's lecture, obviously, you people are studying Finance Act 2024. In today's lecture, we are going to cover the discussion on pay as you earn. What is the concept of pay? How does it work? Second, we'll be discussing the application of starting rate band in case of saving income. We will also discuss the rule and the concept of child income of a child. And finally, we will also discuss the rule and the concept of if income is coming from a jointly owned asset. So basically, in today's class, we will be covering four things. Previously, of course, the entire discussion was on income tax liability calculation. Still, it is same, but with little bit introduction of new rules. So let me just share the screen and then we are starting, okay? Just a minute. So still we are on the same, I would say, area, that is basic income tax calculation, but obviously in today's class we are introducing few new rules. Let's see what happens with these new rules. Okay, these are the tax rates which I have already mentioned in previous classes. I would say the previous two classes, that these tax rates will be given to you in exam, okay? No. Topics to be covered. Number one is pay. What is this pay? Pay as you earn. Pay, pay, pay as you earn. Basically what happens when someone is an employee working for the organization, normally what happens when an employee gets salary, normally that individual, that employee pays tax in advance. That is pay as you earn. Basically, UK taxation authorities, which is HMRC, they collect the tax, I would say, in advance. The name is pay as you earn. So pay as you earn means this is the tax which individual has paid in advance. And you will see this in case of employees. Now the question is, if someone has already paid the tax in advance, so how to deal with that? So let me repeat, the concept of pay means simply the tax which individual has paid in advance. Let's start with pay as you earn. Oh, I hope. Yes, it's okay. So let's see a question. Let's say Mr. X, employment income is 80,000 pound and pay as you earn is, let's say, 10,000 pound. Required, number one, we need to calculate income tax liability. Number two, income tax payable. You will see the difference between liability and payable, don't worry at all. Obviously, employment income is a non-saving income. So let's start. So we'll be solving directly employment income. 80,000. Obviously, on entire 80,000, income tax will not be paid. We will deduct the personal allowance, which is 12,570. Now you will get taxable income. 80 minus 12,570 The taxable income is 67,430. So we'll apply tax rates on 67,430. This is what we have done previously as well. Nothing new. Income tax. Obviously, first we have to use the basic rate band, which ends at 37,700. Applicable tax rate is 20%. 7540. Okay, now student listen. The total taxable income is 67,430. Out of that 67,430, we have tax 37,700. So it means 67,430 minus 37,700. Whatever amount is over and above 37,700, that actually falls in high rate band. An applicable tax rate in high rate band is 40%. So 67,430 minus 37,700, I'm getting 29,730. That is higher rate. 29,730. Applicable rate is 40%. 11,892. Your income tax liability is 19,000. Your income tax liability is 19,432. This is your income tax liability, 19,432. Now, this individual income tax liability is 19,430. This is the total income tax liability. But out of that total, this individual has already paid in advance. How much? Tax in advance paid by this individual is 10,000. We'll deduct that 10. We'll get tax payable. Less pay. Pay as you earn. So the final answer is income tax payable. 9432. This is how pay works. So pay is pay as you earn, the tax which individual has paid in advance. You just first calculate income tax liability, deduct the tax which individual has paid in advance. The final will be additional tax which individual has to pay, which is 9432. Now, look at the rule, please. Case A. Let's say if just I'll show you, leave it. If let's say income tax liability, assuming you are solving a question where your income tax liability is greater than pay, like in this question it happened. If you're solving a question, students, where income tax liability is more than pay, difference is income tax payable. Difference is income tax payable. Okay. Case B and the last. If income tax liability is less than pay, means individual has paid more tax in advance, okay, than his income tax liability. Assuming the income tax liability is £10,000 and pay is £15,000. So if you come across a question where income tax liability is less, the tax which individual has paid, it is more, then there will be income tax refundable. You will have income tax refundable. So simply where income tax liability is less than the payee, so you will have income tax refundable. Obviously, either you are going to have income tax payable or refundable. That's it. So student, that was a concept of pay as you earn. Now, when it comes to saving income, let me just give you a recap. In case of saving income, we know that basic rate band, it is applicable rate is 20, then 40. For higher rate additional, it is 45. One more thing which we have seen in the previous lecture. Someone is a basic rate taxpayer, gets nil rate band £1,000 for the saving income. If an individual is a high rate taxpayer, gets nil rate band £500 for its saving income. Finally, if an individual is an additional rate taxpayer, which we have not seen so far in any question, but let's say, if an individual is an additional rate taxpayer, then for the saving income, there will be no nil rate band. Okay. Now there is one more rule relating to saving income, that is starting rate band. Starting rate band for saving income, £1 till 5,000. Applicable rate is 0%. When do we need to apply this starting rate band? Because we have not seen previously this starting rate band application. Don't worry, today we'll see how it works, everything. Let me show you a question. Let's say there's an individual having employment income, £20,000. Saving income is 25. The requirement is simply income tax liability. Okay. This individual is having two sources of income. One is non-saving, another is saving. We'll make 3 columns. Non-saving income, saving income, and total. Non-saving income is £20,000. Saving is 25, and the total is 45. Personal allowance 12,570. $20,000 minus 12,570. I'm getting taxable income 7,430. 25. Total taxable is 32,430. Obviously, first you have to apply tax rate on non-saving. Entire 7,430 of the non-saving obviously falls in basic rate band. Non-saving 7,430. Applicable rate is 20%. 7,430 and 20. 1,486. Okay, now. Obviously, after non-saving, you have to tax saving income. Before applying any tax rate on the saving income, you have to check for the nil rate band. How much nil rate band individual gets, it depends on individual's tax paying status. Over here, in the last column, student, you can see that the total taxable income in the column of total is 32,430, which is not exceeding basic rate band limit, which is 37,700. Since the total taxable income is 32,000, 430, which is not exceeding 37,700. So this individual is a basic rate taxpayer. Whoever is a basic rate taxpayer gets nil rate band £1,000 for the saving income. So come here. Nil rate band, saving income, £1,000 into 0% is obviously 0. The total saving income which we need to tax is 25,000. Out of 25, we have taken 1,000 in the nil rate band. The remaining is 24. The remaining 24 actually falls in basic rate band. Why? Because this individual is not a high rate taxpayer. His total income is not exceeding 37,700. So that is why the remaining 24,000 of the saving income falls in basic rate band, where applicable rate is 20%. Basic rate, obviously saving income, 24 into 0, 24,000 to 20%. Obviously 20. 4,800. Just add both of them. I'm getting income tax liability 6,286. Income tax liability. Great. Let's see another question. Employment income. Assuming the employment income is just 10,000. Employment income is 10,000. Okay. Saving income is 30,000. Required income tax liability. Let's see how it works. Again, we have to make 3 columns, one for the non-saving, saving, and total. Obviously, employment income is a non-saving income. The second column is saving income. Employment income, you have to write under non-saving. Saving is 30. Total is 40,000. Wow. Now, student, listen to me carefully. Personal allowance is 12,570. First, we deduct the personal allowance from the non-saving income. If your non-saving income is less than personal allowance, it means you will not be able to utilize your entire personal allowance against the non-saving income. Like in this question. Obviously, first of all, I'll be deducting 10,000 from the non-saving income. Now listen to me carefully. Individual gets personal allowance 12,570. We have used only 10. Still, 2,570 personal allowance is left. That will be deducted from the saving income. 2,570. Total is, of course, 12,570. $30,000 minus 2,570. I'm getting 27,430. 40,000 minus 12,570. 27,430. Okay, now. There is no taxable income in the column of non-saving. It is 0. So obviously, I have to go for saving income now. First, income tax. Now, please listen and listen carefully. In the column of non-saving, after deducting the personal allowance, the taxable income is 0. Okay. Now I am applying the tax rate directly on saving income. Okay. Now, I will start from the starting rate band. Now, starting rate band is not utilized, it's not consumed, it is there. Okay. Now, keep watching. Starting rate band, obviously saving income, which is 5,000 into 0% is 0. Now the question is why previously we did not use that starting rate band. Actually, previously it was not available in the previous question. Why it was not available? Because if you look at the previous question, in the previous question, the taxable income in the column of non-saving is more than 5,000 pound. Whenever taxable income in the column of non-saving is either 5,000 pound or more, you will not get a starting rate band for the saving income. Here it is available entire 5,000 because in the column of non-saving, the taxable income is 0. Fine. I'll give you more variety as well. Just wait. Now, next point is you have to check for the nil rate band as well. Obviously, this individual is having total taxable income 27,430, which is not exceeding the basic rate band limit. So this individual is a basic rate taxpayer, so gets nil rate band 1,000 pound for the saving income. Nil rate band saving income 1,000 pound, 0% is obviously 0. Now, the total taxable income of this individual is 27,430 minus 5,000 which we have taken in the starting rate band minus 1,000 which we have taken in nil rate band. So the remaining amount is 21,430 which falls obviously in basic rate band. Basic rate. Saving income 21,430. Applicable tax rate is 20%. 4286. This is your income tax liability. Now let me make bring more clarity. When the concept, the rule of starting rate band comes into action, when you will be getting 5,000 or when you will be getting nothing and when you will be getting even less than 5. So let me show you. Let me make first few columns. Non-saving income. Saving income. Just the concept of starting rate band. Please. I'm writing taxable income. Taxable income. Taxable income means income after deducting the personal allowance. Taxable income means income after deducting the personal allowance. Okay. Let's say you have deducted the personal allowance, case 1, and assuming the non-saving income is 5,000. Non-saving income is 5,000. Now, if you in the column of non-saving, after deducting, let me make it like this so that starting rate band for the saving income. Starting rate band for saving income. Okay, now listen and listen to me carefully. If taxable income in the column of non-saving after deducting the personal allowance, it is either 5,000 or more, you will not get any starting rate band. 0. Now starting rate band you will not get. Okay. Second, if taxable income in the column of non-saving after deducting the personal allowance, it is 2,000. Now, while solving the question, you will get a starting rate band for the saving income 3,000. Okay. If the taxable income in the column of non-saving after deducting the personal allowance, it is 1,000, you will get starting rate band 4,000. If taxable income, if taxable income in the column of non-saving after deducting the personal allowance, it is 0, you will get a starting rate band 5,000. So how much is starting rate band you will get, or you will get a starting rate band or not, it depends on the amount of taxable income which comes in the column of non-saving. If after deducting the personal allowance, in the column of non-saving, taxable income is either 5,000 or more, simply you will not get any starting rate band for the saving income. That's it. Second, if taxable income is 2,000 in the column of non-saving, then you will get a starting rate band for the saving 3,000. If it is 1,000 in the column of non-saving, you will get a starting rate band 4,000 and so on. So if you just look at these cases, 4 cases, then you can 100% understand how much when starting rate band comes into the question and when I will get how much starting rate band. Let me discuss one question. Assuming employment income of an individual is 15,000. Employment income of an individual is 15,000. Saving income is, let's say, 50. Required. We need to calculate income tax liability. What I really want from you, my students, just do one thing. Pause the video, and with honesty, try to attempt this question. Just pause the video and attempt this question, whatever you think. Obviously, after attempting, you can unpause. You should unpause the video and see. But right now, I want you to attempt this. So I hope you have attempted, and then you are watching the answer. Employment income, which is a non-saving income. Saving income. Another column is total. Employment income is 15,000. Saving income is 50. The total is 65. Personal allowance, obviously non-saving 12,570. 12,570. Taxable income. $15,000 minus 12,570. I'm getting taxable income 2,430. It is 50. Final answer is 52,430. Okay. Obviously, now we have to apply the tax rate. First of all, you have to apply tax rate on non-saving income, which we have 2430 in this question. I'm talking about taxable income. Income tax. Obviously, 2430 falls in basic rate band. Basic rate. Non-saving 2430 into 20%. 2430 into 20%. I'm getting 486. Now, you can see that taxable income in the column of non-saving. Taxable income in the column of non-saving after deducting the personal allowance, it is less than 5,000. Since it is less than 5,000, it means starting rate band is applicable for the saving income, but you will not get entire 5,000. How much starting rate band is available? Because the taxable income in the column of non-saving is 2430. The interpretation is 2430 is utilized. Now let's see. Out of 5,000 starting rate band, deduct 2430. How much is available? Still 2570 starting rate band is available for the saving income. In the previous question, we had entire 5,000 because the taxable income in the previous question in non-saving it was 0. So we got entire 5,000 starting rate band for the saving income. Right now, actually, what is happening? Look at this. When your taxable income in the column of non-saving after deducting the person house, it was 2,000. So starting rate band is 3. Right now, we are dealing a question in which your taxable income in the column of non-saving is 2430. This is we have. That is why starting rate band is available 2570. So we are getting 2570 starting rate band. Starting rate band. Saving income 2570 into 0%. Great. Now, students, we have to check how much nil rate band is available to this individual. Nil rate band depends on the individual's tax paying status for the saving income. This individual is a higher rate taxpayer. How do we know? Look at this. The total taxable income of this individual is 52,430, which is more than the limit of basic rate band. Basic rate band ends at 37,700, and this individual is earning total taxable income 52,430, which is more than the limit of basic rate band. So this individual is a higher rate taxpayer. So gets nil rate band £500 for the saving income. Nil rate band saving income £500 into 0% is obviously 0. Now, student, we have to see how much space is left in the basic rate band. Obviously, this individual is a high rate taxpayer, so some of its income definitely falls in high rate. So the basic rate band ends at 37,700. Out of that, we have consumed 2430, 2570, and 500. Let's see how much space is left in the basic rate band. 37,700 minus 2430 minus 2570 minus 500. I'm getting 32,200. So here comes the basic rate. Obviously, we are dealing with now saving income. 32,200 applicable rate is 20%. 6,440. Now we have to see how much saving income falls in high rate band. Because basic rate band we have fully utilized. Saving income which needs to be taxed, it is 50,000. Saving income which we have to tax, it is 50,000. How much saving income we have taxed? Let me change the color. Okay. We have taxed this 2570, 500. It is also coming from the saving income. It is also coming from the saving income. Let me just show you. The total saving income which we need to tax is 50. Out of that 2570 we have taken in a starting rate band, 500 in the nil rate band, and 32,200 in the basic rate. Let's see how much is left. 50,000 minus 2570 minus 500 minus 32,200. We're getting 14,730. Applicable rate is 40%. We're getting 14,730. Applicable rate is 40%. 5,892. So let's add all of them. 486 plus 6,440 plus 5,892. The income tax liability is 12,818. Let me recheck. 486 plus 6,440 plus 5,892. Yes, income tax liability is 12,818. So I strongly believe now you should be having a little bit more clarity how much when starting rate band is available. Now let's move ahead. Let's talk about income of a child. Income of a child. Now listen, obviously child is a separate legal entity, number one. Number two, a main point. Child means age is the someone who is under 18 and unmarried. Child means under 18 and unmarried. So these things are not important. The main important thing is if you come across a question where examiner says income of a child, okay, it will be taxed separately. Child will have to pay tax. Obviously, someone on the behalf of the child will calculate tax and make the payment. The main thing is if income of a child is more than the personal allowance, only then income which is over and above the personal allowance, that is taxable. In case of a child income, amount of the income, let's say the child is very smart at the age of 10 years, generating maybe 20,000-30,000 pounds by making games, playing games, things like that, whatever it is. But the main concept is if child is earning more than 12,570, then additional amount which is over and above 12,570, that additional amount is simply taxable. Only that additional amount is taxable. Okay. Now what? Now, and then the rule is, what is that? If income of a child is a result of a gift which child has received from his or her parents, okay, and income is coming because from that gift, if that income is 100 pound or less, then it's okay, it's child income exempt, no need to do anything. But if, let's say, mother has given a gift to her child, and that gift is generating the income which is more than 100 pound. If income is more than 100 pound, then that income will be treated the income of a parent who has given the gift. How it is possible? I'll give you the example. Let me repeat. If child income is a result of gift from parents, if that income is more than 100 pound, then that income will belong to the parent who has given the gift. Example. Let's say mother or father, any one of them, they have given gift to their daughter or son. The gift is debentures. Obviously, debentures, what do? Debentures, they generate interest. Now listen carefully. If the interest income is more than 100 pound, if the interest income is more than 100 pound, then we will say that this income belongs to the parent who has given the gift. If income is 100 pound or less, then obviously it is for the child, no need to pay tax because it is less than personal allowance. But the rule says if income is more than 100 pound, then that income belongs to the parent who has given the gift. We'll discuss this income of a child through an example. One more concept. Jointly owned asset. Obviously, I'm talking about husband and wife. In case of husband and wife, if there is a jointly owned asset and income is coming from a jointly owned asset, so that income will be split between husband and wife 50-50%. Repeat. Income which is coming from a jointly owned asset between husband and wife, it will be split 50-50%. Example, let's say they are having a jointly owned property which they have given on rent. So whatever rental income they are generating, that rental income will be split 50-50%. Irrespective of actual ownership. There's a possibility that actual ownership proportion is different. But HMRC says in case of husband and wife, civil partners, there is a jointly owned asset. Income is coming from a jointly owned asset, then that income will be split between them 50-50% until unless both of them jointly declare to HMRC the actual ownership proportion. If they both are going to HMRC, they jointly declare their actual share of ownership, only then income will be split 50-50%, or will be split according to their actual ownership. Otherwise, always 50-50. Nothing is mentioned in the question. You are solving a question. Income is coming from a jointly owned asset. It will be split 50-50% until unless it is mentioned in the question that both of them have jointly elected for actual ownership. They have informed HMRC. They have declared their actual ownership to the HMRC. Only in that case, income will be split in the proportion of actual ownership. Otherwise, it is always 50-50. Okay, now let's see a question. Assuming, let's say, employment income of whom? Employment income of Kia. Employment income of Kia is, let's say, 50,000. Kia is getting Kia received interest from bank 1,000 pound. Kia receive interest from, let's say, building society, let's say 5,000 pound. Assuming Kia receive interest from ISA. ISA means individual saving account. The amount is 2,000. Okay, Kia has given gift of 5,000 pound, comma, 3.5% gilts, that is government bonds, to his son, age 12, on his birthday. Okay. Shukia is given a gift of 5,000 pound, 3.5% gift, 3.5% gilts means government bonds. To his son, age is just 12, so child. Okay, fine. Okay. Rental income from jointly owned asset. Rental income from jointly owned asset is 4,100. Required, calculate Kia's income tax liability. Okay, we have to calculate Kia's income tax liability. Now listen. Let's say it's a 6 to 8 marks question, assuming. How to solve? First of all, student, you have to bring all the incomes vertically. Then, how to apply tax rate, I'll show you. First of all, let me show you. What will be the proper format? We are calculating Kia's income tax liability. The heading is Kia's income tax liability. Employment income. Her employment income is, how much employment income they have given us? 50,000 pound. Okay, fine. Then take the interest income. From the bank, it is 1,000. Interest from bank. Interest from building society. Interest. It is 5,000. Okay, now listen carefully. Interest is 2,000 pound, which is coming from ISA, individual saving account. Listen, student, carefully. Right now, you just need to know one concept, one rule. What is that? If your examiner says interest income is coming from individual saving account, it is exempt. Even your examiner says dividend income is coming from ISA, from individual saving account, it is exempt. Even your examiner says capital gain is coming from ISA, it is exempt. So this is what you need to memorize right now. What is the limit of ISA, which is 20,000? How it works, we'll discuss. But right now, please let me repeat, you just need to know one thing. Interest income, which is coming from ISA, individual saving account, it is exempt. It will be mentioned in the question if income is coming from ISA, okay? Like in this question. So how will you write? Let me show you. Interest income from ISA, you have to mention in your answer, it is exempt. Now, if income is coming from a jointly owned asset, as we have already discussed, nothing is mentioned, income will be split 50-50%. Okay. Property income. I'm taking rental income just under employment income. It's okay, no issue at all. Rental income. 50% of 4,100, 2050. I think we have taken all the incomes. Now, look at this. HMRC says if income of a child is because of a result of a gift from the parents, if that gift is generating income more than 100 pound, then that income belongs to a person who has given the gift. Kia has given a gift of 5,000 pounds. So 5,000 pound is not the income, okay? That 5,000 pound is just like their debentures. They are generating income. That gift is not an income, okay? The main thing is 5,000 pound is 3.5% interest. It is generating the interest 3.5%. Now listen. If I take 3.5% of 5,000, I'm getting 175. Let me check. Yes, it is 175. So the rule says the income of a child is a result of gift from parent, okay? And that gift is generating income more than 100 pound, then that income belongs to a person who has given gift. In our question, Kia has given gift. So 3.5% gilts 5,000 into 3.5%. We'll get 175. Here comes the total income. 50,000 employment income, 2050 property income plus 1,000 plus 5,000 plus 175. I'm getting 58,225. Personal allowance, which is 12,570. Here comes the taxable income. $45,655. Let me recheck. 58225 minus 125. 12570. Perfect. Now let's calculate tax. Your taxable income is 45,655. Obviously, whenever we are dealing a long question, first vertically you have to take all the incomes, show all the incomes, total income, deduct personal allowance. Then when it comes to applying the tax rates, you have to make the columns that how much income is coming in the non-saving, how much in the saving, like this. Come here. Now we are doing income tax calculation. Non-saving income, saving income, total. Now please keep watching. Obviously, employment income and property income, they fall in non-saving. So 50 plus 2050. So non-saving is 52050. Now, 1, 2, 3, all are saving incomes. 6,000, 6175. I'll get 58225. Let me change the color of my pen. Personal allowance, obviously, while calculating the tax, you have to deduct from the non-saving first. $39,486,175. So 45,655 taxable income. Now, student, please listen carefully. Not all or not majority, few students, they just can get confused. They think we are taking personal allowance twice. We are not taking personal allowance twice. First, vertically, we have shown all the incomes, total personal allowance, taxable income. Now, horizontally, what are we doing? We are taking the same thing. Now we are applying tax rates. Obviously, when you will be applying tax rates, so you have to separately show how much income comes in the non-saving income, how much comes in the saving income. In this question, there is no dividend income. If there was a dividend income, so there was one more column for the dividend income as well. So right now we are calculating income tax. So that is why we are dividing the incomes into different categories. And you can see that your taxable total income is 45,655. It is same over on the above as well. I hope the message is clear. Now let's calculate tax. First of all, tax rate is applicable on non-saving. Then taxable income in the column of non-saving is 39,480, which is more than the basic rate band. So first use basic rate band. Basic rate band ends at 37,700. Applicable rate is 20%, so I'm getting 7,540. Now listen carefully. Taxable income in the column of non-saving is 39,480 minus 37,700. Difference is 1,780. That 1,780 falls in high rate. Non-saving. 1,780. Obviously, applicable rate is 40%. Now listen carefully. This individual is a high rate taxpayer. Whoever is a high rate taxpayer gets nil rate band of £500 for the saving income. Now, student, this individual Kia is having a saving income to be taxed 6175. Out of that 6175, 500 we have taken in the nil rate band. So the remaining amount is 5675, which obviously falls in higher rate because basic rate band is already utilized. Higher rate saving income 5675. Applicable rate is 40%. 2270. 7540 plus 712 plus 2270. Students, I'm getting 10,522. I'm getting 10,522. This is income tax liability. So students, in today's class, we have discussed number of things. Okay. We discussed how pay works, pay as you earn, how it works. We did discuss that. Second, the concept, the rule of starting rate band, when it is applicable, how much it is applicable. We did discuss that. Third, the concept of income of a child. And we have already also discussed one more thing we discussed. What was that? It is, we have jointly owned asset. The concept, the rule of jointly owned asset. If income is coming from a jointly owned asset, nothing is mentioned. It is split between husband and wife, 50-50%. Student, in the coming class, we'll be discussing, there will be the coming class will also be on income tax liability calculation. So till here, I would say now you should be having a really good grip how to calculate income tax liability. But one more video will come on this calculation of income tax liability. Till then, thank you very much for watching this lecture. See you all, inshallah, in the next class as well.